Just a static analysis one may do with regard to, oil price shock are important, but they're also very imperfect at this point in time. The current episode is no longer merely a price shock, but a material supply shock, and we are seeing spillovers across multiple channels. Now, with gas supplies being curtailed to industries, firms are increasingly restoring to production cuts or price hikes to manage disruption. We've already seen hospitality sector being the first one to face the domestic gas shortage, but we are also seeing production curtailment across major industries such as auto, chemicals, food and beverages, metals, fertilizers. And if energy shortage intensifies, we will probably see that further coming off, and most of these industries again running below their capacity utilization, average capacity utilization level. So, I mean, it may take time to really understand or gauge the magnitude of the current shock that we are bearing. My hope is that this sort of gets contained in the first quarter of this coming financial year, and rest of the year would probably still be hovering somewhere close to average around 70, which still gives us sort of an upside on Brent for an average of around $80 per barrel, which is a direct hit to growth. Of course, the longer the conflict drags on, the greater the risk that energy sector disruption generate a more non-linear hit to the growth of the economy via price shocks, via quantity constraint, and via sentiments and financial channels as well. The only starting comfort here is that the starting point has been pretty strong from India's point of view, which sort of gives us some buffer to navigate the macro adjustment. But yes, assuming that we have a manageable oil shock, which sort of is contained in the first quarter, we still are looking at growth hit to the extent of around 0.4 to 0.5 percentage point of GDP, which implies that for us this year, the GDP growth base case becomes 6.5%.
Okay. So Madhavi, good afternoon, Heeral on this side. Now you're talking about the macros over here. How are you seeing it actually impact the rupee as well? Because what I read from your report is you're expecting the RBI to allow calibrated rupee depreciation. What would that actually mean according to you? And two, the levels that you would be tracking in terms of where the rupee could actually settle?
See, RBI's battle is again going to be very difficult, right? There is no simple playbook as to how the monetary policy response should be for this kind of energy price shock. Again, while we are looking at inflation shock being contained because we believe a large chunk of this oil price shock would be absorbed by OMCs and the government of India, we still are looking at inflation crossing 4.5%. That's not a big concern for me. For me, at this point in time, the bigger concern would be as to how the Reserve Bank really managed the expected or disruption in the macro financial segment of the economy. And that is where I think the problem lies, because we are looking at a very negative play both in forex and fixed income market. So obviously the trade-offs are very clear. What we have understood through the year is that when we were bearing the trade deal shock, RBI somewhere was letting the rupee find its own level. Of course, it was all managed, but the direction was not necessarily changed. And that, I think, that template has been repeated by the Reserve Bank in this recent shock as well. Of course, it's been much shorter, just been a month. But what we understood is that the Reserve Bank has sort of, again, preferred to have a calibrated easing of the rupee to play a natural economic adjuster in this current shock. And we believe that that behavior of the Reserve Bank probably will continue, where they will be doing a calibrated adjustment of the currency and still intervening at the margin to ensure that the speculators do not have their way. But that will also mean that there could be a shock which will also spill over to the rates market, where we expect the 10-year yield may actually, probably linger around 6.95 to 7 in the next 1 or 2 months. But rupee is clearly poised to touch 96 plus in the next 2 months if these things, if the current condition continues.
My goodness, not a line that I anticipated that I would hear in 2026. Madhavi, thanks so much for taking the time. I guess higher for longer is the theme for this year, for 2026. So let's see how it pans out. Thanks so much for taking the time.
Thank you.
Did you